another episode of Silicon Frontier. So, markets have absolutely it's been madness, to be honest. Intel basically trades like a meme stock. SanDisk is finally catching up to the valuation I think it deserves. Same thing with Micron, but it's still far away. I mean, after hours, it briefly hit 1500. Let's see what market open does in 24 minutes. But uh, yeah, I feel like the market is finally pricing the fact that maybe these things aren't cyclical. Surprise, surprise. I mean, it feels like second grader math trying to figure that out. But hey, everyone takes time to come around. Um, Iron showing some good strength. I wonder if there's any reason for it, or just markets trying to buy cheap things now. Let's check it out. Or were their earnings? Ah, their earnings. Okay, so uh, okay, they missed. Uh, cool. Blah blah blah. I feel like we get a better read on Twitter. Anyway, let's see. Going back. Yeah, South Korea be pumping. Been crazy. Storage looking strong. ASML, a nice little recovery. They got beat down a bit recently. Yeah, it dipped all the way to 1300. Had a position in that, so I know. Yeah, it's kind of lagged behind. Like 27% year to date is kind of sad relative to SanDisk or Micron, which are like running multiples. Ultimately, all bottlenecks point to ASML. It's yeah, it's as clear as day. AMD been on a rip. Caterpillar. Overall, market's happy. Cipher. Wow. Okay. I think there must have been earnings or something. Net losses, revenue fell, shifting towards HPC, new development pipeline, more debt, more credit. Hut 8 also reported earnings today. So I feel like we're going to learn a lot on Twitter, but it feels like we've got a few earnings to get through. So let's jump into it. Semis. All right. So cool. Interesting. Wow. That's definitely a nice return. Okay. NVIDIA and Corning announced a long-term partnership. I wonder how hard that chart pumped. Let's check that out. GLW. Yeah. Okay. Yeah, pre-market up 18%. Wow. Wonder how much money Corning makes. What's the EPS? 75 cents. So let's say in a year that make very roughly $4. 190 by 4. Yeah. Similarly, it's like a lot of companies in the AI supply chain are command very high multiples, and like they're bottlenecks, but they're not as big of bottlenecks as things that are actually bottlenecks. So once again, this kind of feels like an instance of the market just running ahead. But hey, there's points to make money. Okay, Google new price targets. So, 470, 460, 450, 450, 400. I don't know, I find analyst price targets like interesting. It's like, oh, this stock went up. Let's say it's going to go up more. The stock went down. Let's say it's going to go down lower. uh, I find it hard to believe a lot of these, but I just say they're rough indicators of what the market's roughly feeling. Okay, that's cool. A bunch of money on R&D spend. Definitely need more of that. Uh, okay, let's check this out. If you listen to one call from last night, it should be this one from AMD. Demand is off the charts for agentic generative AI CPU compute consumption, agentic workloads, and it's simply getting started. Okay, so I don't like the way this guy like posts earnings. The caps can also throw me off a lot. Let's just see what other people are saying. All right, AMD. So yeah, Shade does a good job. 20%. So 2 years ago, data center was a $9 billion run rate business. Today it's a 23 billion. That's crazy. Operating profit 600 million. Now it's 4.4 billion. Wow. Okay, and 12 gigawatts of committed hyperscaler deployments. By the way, like the cost of 1 gigawatt is about $50 billion. So something at this scale is truly, truly phenomenal. Um, yeah, at $4 billion of earnings, I mean, I think it's still 100 PE ratio. So things like AMD, I feel like there's stories that the market just understands. They're like, I can like clearly understand. Like AMD has been around for a while. They're second place Nvidia. What if they become the next Nvidia? So like at 1.54, yeah, like you're guiding what like six, seven, $8 of earnings on 400 by a 50. So there's a lot of things in like that 50 PE ratio, and I feel like you're kind of just buying high at that point. The correct time to buy AMD, like everything else, what is going on with this chart? Anyway, was last year. Especially, I think AMD like was in that 200-ish range at once upon a time. Um, anyway, moving on. Let's see if there's anything else from AMD we should know. Look at these green candles. Makes crypto look really boring and stable in comparison. So data center segment of performance growing the quickest, but see, even like 57% year on year is kind of slow. Like SanDisk is growing 250% year on year. Like when you compare relative growth rates as well, it's people are paying such high valuations for companies that quite simply like are just less performant than their counterparts. And this is where I think returns are separated from the AI trade. At some point, there's going to be like some kind of not correction event because the demand is real, but some sort of scare. Like the information is like OpenAI is 10 days away from going bankrupt, or some fucking article posts that like, like maybe the compute demand is all fake. I don't know, something retarded like that. And when those sell-offs happen, I feel like over time the market's going to start calibrating to who actually has earnings, because right now the market's just like, hey, you seem like you're an AI, you seem like you might be a bottleneck, here's a bunch of money, you should pump. But yeah, the whole like CPU to GPU configuration, I personally don't buy the story off the bat. Like, I know it is happening, but in my own experience, like CPUs are not the bottleneck. GPUs still predominantly are. And like to have workloads that you can properly orchestrate across 8 CPUs to 1 GPU is kind of hard. Like you gotta really know what you're doing and be really good at building agents. Like I personally, I'm struggling to allocate my I've got like a server rack, physical server rack that I own. And even orchestrating all of that compute, that's about 128 cores, and I've got like a RTX 6000 Pro with me, which is about 128 gigs of VRAM. The whole machine's about $15,000, and I'm still like really trying to make sure I can allocate and keep that thing busy. But like as soon as you're on any inference job, it hits 100%. So people are like, oh, it's like a 1-to-8 ratio of like CPUs to GPUs. I'm like, how exactly does that work? Because something doesn't add up in my mind. But maybe it's a skill issue on my end. But even when I see across like other builders and people using this technology, the CPU to GPU ratio thing just feels it doesn't seem real. It seems like something that the CPU companies have been like, hey, let's try and get our share. But there is a CPU shortage. I wouldn't deny that. But I mean, what isn't there a shortage of? So CPU to GPU, more CPUs than GPUs. I don't know. I guess they're saying there's more orchestration that will be done between the work resulted from a GPU. I don't know. Anyway, let's check out what happened with Iron, because they pumped pretty hard. Okay, so that was the Morantis news. So their earnings. Mm, okay, to give you one of the contracts we're negotiating at the moment is a multi-billion-dollar contract where we need to bring a software solution. So Iron's trying to really move into the software play, very similar to Nebius. I think they're seeing how the Nebius playbook is going because with this stuff, right? If you get land with power, that's of course like the first challenging thing. Then you build on top of that land of power, and you have these data centers. You then either rent the data center facility as is and collect rent on it, or you say, hey, we're gonna like become a cloud, and we'll have your managed Kubernetes and all of the software ready for you to use. And that last little bit, you can have so much margin. So if you've done all the hard work, why not just move up the stack a bit more? So it's a smart move on Iron's part, but I think like the team has nowhere near the amount of experience that Nebius does. For that reason, I do rate Nebius a lot higher than Iron. Um, no comments on there. Cool. Let's go to Hut 8. I was actually tuning into the earnings calls this morning during breakfast. And some cool things going on there. So what I like about Hut 8 is they're just like, hey, we have land with power. That is like all we really care about. So they have a 15-year lease worth $10 billion for 400 megawatts. But it's triple net lease. It could be valued up to 25 billion. And let's pull up the data on Hut 8 for a second. It's been on my watch list. Oops. Yeah, massive move after hours. But like for, let's say, what's the market cap? For 9 billion, it's like, yeah, this one deal is multiples of their market cap. It's yeah, and they're not. They basically just say, I'm pretty sure they don't buy the GPUs. Sorry, not the GPU. I'm pretty sure they say, here's a bunch of land with power, do whatever you want with it. Iron kind of started off with that, but then they said, oh, let's do a bit of software. Like I feel like Iron is the ugly kid trying to do everything. I don't know what they do well, but they're trying to do everything. Versus Nebius is like actually can do everything. But I'm pretty sure Nebius would be a client of something like Hut 8. Anyway, what were some other interesting things I wanted to dig into today? So we had any unusual moves? Intel, Iron, Cypher. Yes, I wanted to see Cypher. Let's go check that out. Cypher. Okay, so there we go. They secured 4.2 gigawatts of power capacity and signed another hyperscaler deal tied to its AI data center build out. Okay, that is great. Tell a retail investor outside of X, Cypher just launched their 300 megawatt Barber Lake data center versus Cypher just launched their 300 megawatt Leviathan mega cluster in Barber Lake. See which gets more attention. I agree. Like a lot of stuff you have to play to the crowds. Is what it is. Yeah, in my view, the real bottleneck isn't like power, isn't like, oh, like by Navitas or whatever. It's like land with power. That is like one of the biggest bottlenecks in this whole game. Um, so let's see. Data center leases revenue to track to commence with quarter for 2024. More deals coming through. I wonder if we have anything on margins. That's crazy. KBW analyst Stefan something put out a note this morning estimating that Cypher's new hyperscale lease at Stingray was priced 15% above the lease they signed just months earlier. And to me, this is really the thesis of the land with power play, because you do all this hard work of getting these chips, buying them, negotiating contracts, blah, blah, blah. Then you're like, you need to physically install them, and power is your biggest bottleneck. You can't just put them anywhere. So to it's very plausible to me that people who have land with power will have a lot more pricing power than people imagine they do right now. And I think that's kind of like one real opportunity that exists in the market. Companies like Hut 8 are good bets on that thesis. Um, yeah. Anyway, let's scroll generally in semis land. Uh, Talon Energy, Talon. So, operating revenue, EPS 1.33. Okay. I mean, I find energy hard to allocate to because there are so many ways you can, like, so many energy mixes, and it depends on the thing. So, energy is like a good broad play, but I wouldn't say it's like the highest beta play if you're here to make as much money as you can in the market. Okay, I feel like I need to mute this Valuos guy. He has just a lot of noise. AMD up. This 100%. It's like a lot of people are like, oh, what's next SanDisk? What's the next Micron? They're chasing like overpriced CPUs or chasing optics. But it's just like, why don't you just buy and hold the thing that's solid, priced reasonably, and has a lot of room to go on the upside? Most bought US stocks by Koreans over the past month. I love the Koreans, man. They love to gamble. When they get wiped hard. And when they gamble, they go hard. Yep. Agreed. That would be very fun, actually. Like, yeah, just having like an AI built. I mean, I don't trust AI for logic-based decisions yet fully. Like, it's very good at the past and maybe the present. The future, it's really not great at. But maybe you don't need someone who can tell the future as long as they just execute on the past well enough that makes the city good. The only companies firing people because AI makes them so wildly productive also share these attributes. Overhired during COVID or market share losers have giant capex spend. I do agree with this. A lot of people are like, oh, AI is taking jobs. Like, no, maybe the company just sucked. Anyway, Uber quarter one. Man, it just seems so boring looking at like normal companies like Uber relative to AI ones. Game theory pretty much proves that the long game is not a strategy most people can execute at all. That's because it tends to require a negative short-term position in exchange for a real advantage later. Interesting. Sweet. Let's go. That's crazy. I do think there's a lot of these like very good retail traders who just do like multi-100%, and they kill it, you know. And to me, I think anyone who's like, oh, like 10, 15, 20% a year, is like elite. I think it's like my like hot take is that if you believe there's always innovation somewhere in the world and always like value, then it should be more. But I think with a lot of these things, it really comes down to like how much capital you're managing. Returning certain percentages with like billions of dollars is way harder because anything you buy, you do become the market yourself. So anyway, 7th gen DRAM hits a wall. Samsung goes vertical. SK Hynix pushes planar to the limit. So sub 10 nanometer 7th generation 1D extreme scaling nodes, Samsung Electronics and SK Hynix are drawing fundamentally different roadmaps to break the physics limits of next generation DRAM. Samsung pursuing a vertical path and Hynix pursuing planar to its extreme. So Samsung Electronics is currently researching a 16-tier vertically stacked DRAM process rather than building single-family homes. So I actually don't understand like this beyond a certain point, so I'm not going to pretend like I do. Let's go to Claude and see what this actually means, and let's break it down. I am not a semiconductor engineer, but I am an investor who's fairly knowledgeable. Can you simplify this down for me? Cool. So DRAM has been scaled the same way for decades. Shrink the circuit, fit more bits on each wafer, drive cost per bit down. Cool. That makes sense. The playbook is running out of room at the upcoming 1D node. You physically can't shrink the key components much further without breaking. So both Korean giants need a new trick. They're betting on very different ones. So Samsung's saying go vertical. So rather than high-rise apartments and trying to cram more cells onto a flat surface, Samsung wants to stack 16 layers of DRAM cells on top of each other. This is what the industry did with NAND flash, so the memory in your SSD. So vertical stacking unlocked years of density growth, but DRAM cells are structurally more complex than NAND cells, and it's a much harder engineering problem. It's a high-risk, high-reward play, but could work. Hynix is basically saying that rather than reinventing the cell, redesign the layout so each cell takes 30% less floor space. So from a 6F2 to a 4F2 footprint. The industry's known about 4F2 for years, but couldn't make it work reliably. Lower risk, faster production, and reuses more of today's thing. So the race is partly about technology and partly about standards. Whichever architecture gets adopted by the industry essentially defines the market for the next generation. First production ready wins enormous leverage. So really it sounds like, okay, so what is the downside of Hynix taking the lower risk strategy? If they qualify first for contracts, then doesn't that mean they will win and set the next generation design standard? Okay, so the 4F2 approaches ceiling. And once you capture that 30%, you can't really go beyond that. So Hynix might win the short-term race, but Samsung has a higher ceiling. Okay, so standards aren't about being first, it's about longevity. So the NAND precedent is worth watching. When NAND flash hit its planar scaling limit about a decade ago, Samsung bet big on vertical VNAND and shipped first and dominated for years. The real risk for Hynix isn't losing the next node, it's winning the next node and then finding themselves a generation behind on the architecture that defines that one after. Interesting. So they're keeping a vertical option open as a follow-on. And see, I think this is the stuff that is going to become more important to understand as semiconductors become more heated and like the easy investment opportunities go. Like really understanding how are different companies taking their scaling paths, because with this, what it really means is that if Samsung overtakes and becomes the largest DRAM player, that does impact Hynix. But once again, demand for this stuff is basically infinite. That who knows? It's an endless pit. But yeah, I think it's really good to like make sure you kind of understand little things like this, because they develop a deeper understanding for you about like what is it that you're buying and how does this stuff like impact, so that when you're saying like, do I buy Samsung or Hynix in my portfolio, you're thinking about the different trade-offs they're making. If you believe NAND flash storage is going to grow quicker than DRAM, which companies are in the race, which approaches are they taking, etc. So yeah, just something to kind of keep in mind. Iran deal closed, war pause and nuclear talks. White House is nearing a one-page MOU with Iran to halt fighting and start nuclear talks. Iran is expected to respond within 48 hours. No deal is final. Pause arrangement, no nukes. Ease sanctions, release frozen assets. I feel like it's already priced in. Like maybe once it finally goes through, maybe the market gets a bit more euphoric. But yeah, CEO of Micron was co-founder of SanDisk, in case you didn't know. This guy is an absolute baller. I think, like, you know, let's just go into his background for a second. Sanjay Mehrotra. Like, I think studying people like this in their history, like, how did he get into this? Why did he stay in it? Like, these are, I think, the real questions So let's check this out. Education. So went to Berkeley back in 1978, electrical engineering, and then did an MBA back in 2009. But whatever. So started off as a design engineer at Intel. Then that's crazy. Co-founder, presidency of SanDisk for 28 years. Uh, I think this is just excellent, truly. And I think a lot of the younger Silicon Valley types have this notion like, oh, if I haven't made it by like 25, 30, I'm cooked. But you kind of see through someone like this is what, like a 35, 40-year career, and he's still going really strong. And uh, the technology that Micron and SanDisk have developed is truly world changing, right? Like, this man has dedicated almost his entire life now, 44 or 5 decades, to solving this. And he will arguably be one of the most important men in the world, because whoever controls memory really controls how the supply chain moves downstream. So, yeah, I mean, good on him, man. Like, he deserves it. Cool. Yeah, Micron is still cheap, in case you're still wondering. Cool. Let's look at this. So, literally been showing that we're moving insanely fast, but the spreadsheet extrapolation maths is not tied to the reality of constraints getting worse. So, where is it? A data center revolution without data centers. We estimate decreasing likelihoods of scheduled data center activations as the lead time increases. So I think that's basically, I think bears will cite that it's, if you can't bring these data centers online, it's going to be a bubble. But I think that's the wrong conclusion. What we're really going to see is whoever has the real bottleneck will start squeezing everyone else above them in the stack. So if we see, this was April 17th. So U.S. hyperscaler operational capacity reconciled across a few different places. So 20 gigawatts is under construction and 32 gigawatts pipeline. I wonder if this is a public site. Yeah, I mean, like, even just grid transformers are on like a 5-year backlog. Gas turbines are on a 5-year backlog. Like, at some point, it's not really clear how you do get this compute online. So if you can't get new compute online, the existing compute will become a lot more expensive. And the case for that is really just all of your data center stocks: Galaxy, Oracle, Cypher, CoreWeave, Nebius. I think these stocks are kind of not priced correctly by the market as of now. Anyway, I think that's about it on my end. Thanks all for tuning in, and we'll catch you all tomorrow. Take care.